So now let's go to section 900. These are the items that the lender requires to be paid in advance. So section 901, these are like daily interest charges. So this one is like these are the interests that the lender wanted you to pay right away before they even fund you the money. And in this section, it will indicate how the interest was calculated, like the interest rate, and also from what date, from what period, up to what, from what and to what period they calculated the interest. Section 902, this is a section where the lender wanted you to pay the mortgage insurance premium to be paid in advance. So what is a mortgage insurance premium? So this is like an insurance just in case you cannot pay the mortgage. So the insurance will kick in if you cannot pay the mortgage, but you have to pay for the premium for it. So if that event happens, this will protect your loan. And then section 903 is the homeowner's insurance. So, and this is the part where it's basically for the property, for the real estate property, regarding the insurance related to it. That means like if there's anything that happened to that property for whatever reason, this is the premium that the lender required you to pay during the closing. And the daily interest charges, the 901, that interest can be deducted as a current expense. And then 902, which is the mortgage insurance premium and the homeowner's insurance, you can only expense it over the payment period. So it's basically you have to amortize it over the period that you're covered. You can only amortize the mortgage insurance premium over the period that it covers. So let's say you're paying for a 1-year mortgage insurance premium, so that's how much you can only deduct for that specific period on your tax return. So to clarify, what I'm saying is that's how much you need to divide that homeowner's insurance and mortgage insurance premium, divide it over the period of those insurance cover, and that's how much you can deduct for the current year. Okay, so let's move to the section 1000. These are the reserves deposited with the lender. So section 1001, this is reserves, means like a deposit or a down payment. So it details how much down payment that were deposited to the escrow account, and whatever amount here that was deposited to the escrow account, it's deductible for the current year, as long as the funds were dispersed or as long as the funds were already paid by the escrow during the same year. So if they indicated here that the amount you deposited to the escrow account will be paid to the lender in the same year, then you can deduct the entire thing 100% on the current year. Section 1002 is the homeowner's insurance. That means that you included it to the deposits with the lender, and the mortgage insurance and the property taxes. It is just basically detailing what are the things that you paid to the lender to take care of these insurances and property taxes. And of course, once the escrow account disburse all these charges to the the third party, like the homeowners insurance company, the mortgage insurance company, and to the government to pay for your property taxes, that's when you can deduct that for the year. So now let's move on to the section 1100 title charges. So on top of all these payments, now there's like fees that you still need to pay related to the title of the property. So section 1101 is fees related to title services and lenders title insurance. 1102 is the settlement or closing fee. 1103 is the owner's title insurance. 1104 is the lender's title insurance. 1105 is the lender's title policy limit. 1106 is the owner's title policy limit. So these are just information, 1105 and 1106. 1103, which is the owner's title, and 1104 lender's title insurance. So the owner and the lender has their insurance to protect the property title. 1107 is the agent's portion of the total insurance premium. 1108 is the underwriter's portion of the total title insurance premium. So all these charges will add to your adjusted basis of your property. It adds to your cost. And if it's part of the cost of the property, this will be depreciated over the life of the property. And you can include here the underwriter, which I already mentioned, the underwriter's portion of the title insurance premium, the fees related to document preparation, notary fees, attorney fees. So any fees related to the title of the property, this is where you will see it on the title charges. So on this section, it'll be part of the cost of the property. So now let's move on to another fees that you'll be paying. 1200 section. It's a government recording and transfer charges. So this includes the government recording charges, recording fees, the transfer taxes, the city, county tax or stamps, the state tax or stamps. So this is like when you have the title on the 1100, now you have to register it. So these are like fees related to the registration, the government records. So these charges gets added to your adjusted basis of the property. And of course, if it's added to the adjusted basis, it'll be depreciated over the life of the property. Okay, so another charge, and I think this will be it. Section 1300, additional settlement charges. These are like Section 1301. These are required services that you can shop for. 1302 is a survey. 1303 home inspection. 1304 pest inspection. And all this you can add it to the property cost basis. But these are all good charges because it protects what you're buying and it gives you more security to the property you're buying. And any fees related to this, it gets added to the adjusted cost basis of your property. And of course, it'll be depreciated over the life of the property. So remember, the properties, if it's a personal property or a real estate property that's used for primary residence, you will depreciate it over the 27 and a half years, like the building and improvements related to it. So in summary, what are the things that should be added in the adjusted basis of the property when you're looking at the HUD statement? So look at the contract sales price and pick the cost for the improvements and the building, you add that. And then if the personal property is part of what you're purchasing, then you add that too. Then on section 804, if there is an appraisal fee and the appraisal fee is not required, you add that to the cost of the property. Then all the charges in section 1100, the title charges, you add that. These are like mostly the closing costs, the insurances, attorney fees. You add that to the cost of the property. And then section 1200, you add everything in the cost of the property. Section 1300, you add that too, of the inspection to the cost of the property. And then if there's an amount on section 206, such as lender cure, and section 214 as transfer taxes credit, those will be reducing your adjusted cost basis. And these are the following items that will not be part of the cost of the property, however should reflect in your records that you can deduct as an amortization or on a yearly basis. First is the loan origination charge and the loan credit points. These are the fees that you paid for related to the loan, and you can deduct these over the term of the loan. Like you can deduct it over the term of the loan. So if the term of the loan is 30 years, you divide that by 30 years, and that's how much you can deduct on your tax return yearly. Then on section 1000, you can deduct the entire charges here: the homeowner's insurance, mortgage insurance, property taxes, and the initial, basically whatever you deposited to the escrow account that was used for the year to pay for these, you can deduct this on your tax return. So that's it. So I hope you enjoyed this course, and if you want to learn more, check out the other courses I have, and please leave me some comments or questions. I'll be happy to hear from you. Thank you. Again, this is Mary Rafa.